What's up, guys? It's Rey-Jay back with another video, and in this one, I want to break down what's happening with SPY, Tesla, and the overall markets. I'm going to break down some very key levels to watch for, what's happening involving Donald Trump and Jerome Powell, and some big catalysts for the week. Just know that I'm not a financial planner, so take nothing that way. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 30 in total, not to mention 8.1% APY in uninvested cash. The offer ends at the end of March. Anyways, now let's talk about what's happening with the market. So, as far as the market's going, as you guys can see, for the last 2 weeks, we've been making consistent lower highs and lower lows, dumping over and over and over again. Now, overall, the trend has been bearish, but there is one good piece of news. That's the fact that SPY is holding its daily 200 EMA. Now, if we see a small rebound and just dump from here, we end up losing the support. Yes, that's going to be a bearish sign if our EMAs start trending downward. If we end up losing this 200 EMA, it's going to be a very bad sign if we close below that. Then yes, there's going to be a very big case for the bears if that happens. But if going into this week, if we hold this key support, there's going to be an attempt for the market to try to rebound. And there's a very good chance of that happening after we dump so much without any sort of bounce. So I'm going to talk more about this in the next couple of minutes, but I first want to break down some important news involving Donald Trump and Jerome Powell. Then I'll talk about all these different charts. So with Donald Trump, keep in mind that on March 4th, he imposed 25% tariffs on Canada and Mexico. This was huge news because then we start to see these countries promising to retaliate and things like that, which led to a lot of fears for the stock market. Then on March 5th, we had some news that came out the next day. Donald Trump granted a 1-month exemption to his tariffs involving the auto industry if they qualified for particular regulations from the USMCA. So keep that in mind. That was some very big news that came out. He delayed some tariffs. March 6th comes, and then he was on the phone with the president of Mexico. They spoke for a while, and then they made a lot of agreements when it comes to making progress involving border security and other things like that. So Donald Trump said that for that reason, he postponed the tariffs on many imports from Mexico and some imports on Canada for about a month, but he is still planning on imposing reciprocal tariffs starting on April 2nd. And I know this source doesn't show this, but Donald Trump did also mention that if negotiations did not go in favor of the U.S., he would be open to the possibility of increasing tariffs to over 25% on each of these countries. So he is very strict, very tough on these countries. He's willing to increase tariffs and use them for negotiation tactics, and that's what's causing a lot of uncertainty so far. Now, that does not necessarily mean we're done because March 12th is coming up this week in just a couple of days, and the Trump administration is planning on reviving policies enacted through the president's first term, which include a 25% tariff on all steel imports set to be imposed on March 12th. The leader is also planning to raise his original 10% tariffs on aluminum imports from 2018 to match the 25% tariff basically on steel. So that's some big news. It's going to be affecting nations all over the world, from Argentina to Australia, Brazil, Canada, Japan, Mexico, and many others. So with that being said, now these countries are going to be required to adhere to the 25% standard on these imports. However, it's not 100% guaranteed because one thing you have to know about Trump is that he likes to use these tariffs for negotiations. He tries to get other countries to form deals with the U.S., and he's going to be very strict about this. So we'll see if he truly just imposes these and keeps them that way, or if there's going to be more delays or anything else like that, because sometimes things can change, just like what we saw with the Mexican and Canadian tariffs. Now, if that's not the case, and then we just see him straight up just impose the tariffs, not really change much, that could still affect a lot of different products in the US. It could affect the stock market to some extent, which is why we have to be very cautious right now. Now, with all this uncertainty about what Donald Trump is doing, because one day he was imposing more tariffs, the next day he wanted to delay them, the next day he was talking about increasing them again, then he delays them again, right? It's all over the place depending on what Donald Trump's trying to do, depending on his deals and factors like that. And with that going on, Jerome Powell did mention this. He mentioned that there's a lot of uncertainty associated with Donald Trump's tariffs. And then he said that they're going to wait and see how Donald Trump's policy actions play out before it moves again on interest rates. So that's going to be important. He mentioned that there's no need to be in a hurry because they're well positioned to wait for greater clarity, right? That's what that's what Jerome Powell, just said. He also mentioned that the Fed is in a very critical place where they don't want to be prematurely making changes until they see how things are going to be looking. So he's basically saying they're going to wait on the data, wait and see what Donald Trump does, wait and see what happens with inflation before they start to take further action. For now, he implied that the Fed is going to keep rates the same and just be patient. So we'll see what this leads to. Also, you could argue that the Fed could be, behind. I mean, some people make that argument. We'll have to see. But that depends on what we see in our economy. Because if things start breaking real fast, then the Fed's going to be in a position where they have to cut even sooner than expected. Jerome Powell has mentioned that we're not really there. He's still optimistic about the labor market and such. He's still okay with the way things are looking, but he just said that there's uncertainty about Donald Trump's tariffs, and the Fed has to be patient with those. So I hope that's as clear as possible. We're not in a place where the Fed is doing emergency cuts yet or anything like that. The Fed is going to be holding for the time being until we get more certainty. Now, besides that, on Monday, which is going to be tomorrow, March 10th, don't forget about consumer inflationary expectations at 10 o'clock a.m. Then at 10:30 a.m., we have the 3 and 6 month bill auctions. So we'll see if the data that comes out causes a dip or not. I know that consumer inflationary expectations may be high, but then despite that, we'll have to see how well the market holds up. Also, later on during the week, we have some jobs numbers coming out on Tuesday. On Wednesday, we have CPI inflationary numbers coming out. That's going to be very, very big for the stock market. And then we have PPI on Thursday. So those are the main things for the markets. For now, we're going to be listening to what consumer inflationary expectations look like. Now, to add on to this, I just want to say that we have some retail announcing earnings. We have like Kohl's, Oracle, we have Adobe, and the list goes on. This is what the earnings calendar looks like, nothing too crazy. And the last thing is this: we have the extreme fear making up the majority of sentiment right now for the fear and greed index. Momentum is at extreme fear as we're losing our key 125 daily moving average on the S&P 500. And then you also have to look at the fact that the puts call option ratio is at extreme fear. This has gone up, and there's so much fear right now. People think the market's going to crash, which is why I think that, which is why I would want to favor like upside, but I'm one of those traders now where I'm just going to wait and see what the price action does just for confirmation. So, just to be very, very clear, guys, let's focus on the charts from this point on. If SPY ends up pushing tomorrow, and then with the consumer inflation expectations being high, just hypothetically, we could come down, see like a dip move like this. But what I want to say is that if you're bearish, you need to see us close below this 200 EMA, below like 568 at the very least. If we close below that, not going to be a good sign, guys. We could be continuing to dump then if that ends up being the case, if we close below this key support. That's the bearish case, so make sure you watch that very closely. If we close below where this red line is right here, that like 568 area, it's going to be a bad sign. Now, what if it's the opposite? What if we don't do that? What if SPY ends up holding support? What if we do something like this where we start with the push, we get a little pullback because of the inflationary expectations, whether we retest this blue trend line or not, but then we establish a higher low, right? If we make a higher low compared to this and we manage to close above this 200 EMA again, that's a sign that the market's trying to form a base there, and you could be expecting an upside move because of that. And then once we break this yellow resistance, we're looking for an attempt to start pushing to these higher levels for a temporary rebound move. And this could happen much quicker, guys. I kind of spaced this out on the daily chart. Maybe it's better if I go to the 4 hour just to show this to you. So I think it's a little bit easier to see. But basically, in the span of just a couple of days, especially if we get a decent CPI, if we make a higher low, we don't end up losing this low and we reverse and get back above like 580. We're looking for an attempt to get back up to about 585 or so to start pushing up for like the 590s, especially because we're forming like an accumulation, and this could be like a bullish divergence on the 4 hour time frame. So that's the more bullish case if that ends up panning out. So make sure you guys are prepared for anything just to be safe. Watch your key levels, but let's break this down. As long as SPY does not lose 568, if we could hold above 568 to 570, then there's a good chance that this could dip and bounce to try to make a move back up. If we lose that, I will turn bearish. But for the time being, what I think is most probable is that there might be another downside move, but as long as we can make a higher low, this bullish divergence that's starting to develop on SPY could start to play out. I also want to see us get back above 580. If we could reclaim that, that's going to be a very, very good sign. There's a good chance that this could try some kind of reversal structure. So the daily looks a bit more bullish. Okay, we have a bullish divergence. These EMAs have been acting as resistance, and the market's been dumping for 3 weeks in a row without any kind of major bounce. So that makes me suspect that we might be getting that bounce. We need to see SPY hold our 200 EMA at 568. Look for a pullback move, maybe because of consumer inflationary expectations that might cause a little pullback move. And then we could be looking for an attempt to get back above 580. If we do that, there's a chance that this could base and then eventually try to start, pushing higher for a temporary reversal. So I lean a little bit more in favor of the reversal. I think that it's more probable we get that. We make a higher low than we try to bounce. But just for confirmation, I'm being very unbiased when I say this. Watch and see if we lose 5, 6, 8 or not. Do we lose our 200 EMA? Do we lose this area of support from before? Or do we end up holding it, right? I'll be watching that very, very closely on SPY for confirmation. On the QQQ, the same exact thing happened. We held above our 200 EMA, the key support at 490. Also, when you look at the 4-hour time frame, we're doing a good job at holding up, especially because of this triple bullish divergence that's developing right here, which typically signifies upsides coming. Now, there's a very interesting pattern for the last couple of days where we hit our 200 or our 20 EMA and rejected, hit the 20 and rejected over and over again. If we get back above that, we're looking for an attempt to get back up to 506. So I'll see if that ends up being the case or not. So please keep that in mind, especially with our 4-hour looking a bit more bullish. So just like what I'm saying about SPY, it's the same setup essentially. So if the QQQ ends up failing to hold above 490, if we end up kind of pushing, sorry, hold on guys, I think my line got deleted. If we push right over here and we get a big rejection, if we end up losing 490, we see like 485 or below, that's going to be a bearish sign. This will be continuing to dump all the way down towards 475 or below. If we could hold above this red line, see the red line right here, we actually held above it on Friday technically. We push, we make a higher low, and we actually hold it for close. There's a good chance this could start to form an accumulation and try to make its way back up towards this imbalance over here. So this would attract us right back up for a basically 506. So there's a chance we might be looking for a temporary rebound move, especially considering the fact that we're down about 3 weeks in a row. Maybe much of the tariffs could be priced in. So I do lean a little bit more in favor of that bounce, but that depends on if we hold support. So make sure you watch your levels just to be very, very unbiased. I'm trying to be unbiased when I say that. For the Russell 2000, okay, we're looking weak, making lower highs and lower lows. But one thing you'll notice is that we're forming a slight, very tiny, teeny tiny little bullish divergence here. We're forming some nice wicks below, and we're holding the psychological 200 area. We also saw this head and shoulders almost fully pan out, taking us back down towards that support. So I would think that, there could be a rebound on this, but that depends on if we could break back above this white trend line. If we break above that, then I'm going to be looking for an attempt to get back up to that imbalance, taking us back up towards like the 210s. If not, if we kind of like push to the trend line and we get a rejection, you want to see us essentially lose 200. If 200 fails us, then yes, this could be dumping to 197 and 195 pretty fast. So watch those levels closely. Lose 200, we're bearish. Hold it, and we could be looking for a rebound for 205, then 210. I'll be watching that very closely. Also, keep in mind on Friday, SPY, the QQQ, and Russell all closed in the green, so that's a good sign. For ES had these ranges. We got this rejection. We're kind of trading sideways here. We tried to break out of this and we continue to trade sideways. Got another big rejection. Now we're watching to see if we could get back above our resistance. So we're going to be watching this very, very closely. There's a big wick right over here. We're watching to see if we could hold support. If we end up losing support, we're looking for a dump below 57.50. If we don't hold 57.50, it's not going to be a good sign. I could be looking for this to decline back down to the lows all over again. That's going to be a very bad sign if that ends up being the case, right? If we hold 57.50 on ES, I would think that this is going to try to get back above this yellow trend line and even try to test our 200 EMA at 58.25. Then we'll see if we break that to continue to go higher. My guts tells me this is what's going to likely happen, but just to be safe, watch your levels, watch them very closely, and watch and see what kind of reaction we get. I also like the fact that NQ closed above 20,000. It's a decent sign. And then if you look at this blue line right here, right, this was resistance, 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 resistance. And then in this case, it's becoming support. We're actually starting to hold this blue trend line. So you want to see it get back above 20,610 to really rebound. If not, it's going to be a bad sign. I could be looking for a test of 20,600. If you reject there, then we could continue to decline and just continue to fall. But if we get back above this, we're looking for some kind of bounce. I believe we're going to be retesting 20,600. And if that breaks, we're going to go a little bit higher to get back up to about 21,000. I think there's a very good chance of that potentially happening. So keep that in mind for the next couple of days. I believe we're most likely going to be retesting 20,600, at least within the next 1 to 2 trading days, and we'll see a big reaction after that. Now, Bitcoin's very heavy after we had a big news that came out that Donald Trump signed in order to establish the strategic Bitcoin reserve. So as a result, it's kind of like a buy the rumor, sell the news event. This could dip a little bit more, closer to about 80,000, if not 77,000. Then we could be looking to see if we bounce off that, because that's a very, very big support on Bitcoin. For now, I do expect a little bit more downside before we see a big move. For Nvidia, I do like the fact that the daily chart has a gap above that's unfilled, and we're forming a nice wick here, which could lead to a rebound. Also, when you zoom out and go to like the 4-hour time frame, the 4 hour is looking pretty good, especially as we're trying to break past our key resistances. So we have a bullish looking 4-hour candlestick. We have a bullish divergence right here on Nvidia, but that depends on our levels, of course. If Nvidia hypothetically loses 110 tomorrow, if 110 fails us, I'm not going to look at that as a good sign. We could be retesting these lows back down to 107.5 or below. But because the daily looks quite good and we have a gap to fill above, I presume that's unlikely. It's unlikely we just start losing these lows and just continue to dump. What's more probable is that we pull back a little bit, we get a little liquidity grab near 110, then we bounce, and we could be looking for an attempt to get up to 115 to 117 to fill that gap. Also, keep in mind we got a green close on Nvidia for Friday, so that's a good sign. Look for a little dip. As long as we hold 110, I'm going to be looking for an attempt to get back up to fill that gap, and then 115 to 117 could be retested. On Tesla, we're looking pretty good right now. We dumped quite a bit. The last couple of weeks have been very, very bearish. It's been dumping and dumping and dumping. But what I do like is the fact that we filled our daily gap back down to 250. So we filled the gap, and now we're seeing buyers trying to defend it right here. When you go to like our 4-hour time frame, we got a bounce move right here, right? We formed a slight bounce. We have a very big bullish divergence developing on Tesla. I also want to add that we're back above this trend line on the 4-hour time frame, and then we dumped and dumped and dumped and dumped. Yes, but now we're seeing, we only closed down 0.3%, so we almost closed close to being flat, and then we dumped so hard without much of a bounce. What oftentimes happens to Tesla is that we hit a big support, then we see some kind of rebound move. Like, for example, right here, we have the support right over here where we rebounded after we filled our gap. So in this case, we dumped to fill the gap at 250, and then that's a big support. So if that holds, we're going to be looking for a nice rebound back up towards that, into the 270 area, right? That's also where we have this imbalance. So as long as Tesla makes a higher low, as long as you don't lose this low, we could be looking for an attempt to get back up to 270 or so. There's a very, very good chance of that potentially panning out. If we lose this low, this could be dumping a lot more, but we'll see if we get that reversal move. As long as we make a higher low, this could be looking for a bounce for 270. I think there's a good chance of that potentially panning out. For Apple's looking quite decent right now. We have a nice divergence forming. I am a little concerned about the fact that we're technically below this yellow trend line. I need to see Apple reclaim 240 for this to bounce. If you reject there, it could be looking for a dip back down to about 235. So I need to see 240 hold. My gut tells me there's going to be some kind of downside move first, maybe to retest like 236 or so before it tries to bounce again. But if we see a small dip and we bounce, we need to see it eventually get back above 240. If that's the case, we're looking for a bounce. It's a little bit in the middle right now for me. With that being said, I'm going to do a speed run for the rest of these tickers just because a lot of people request them. Looking at, for example, Netflix, it dumped really, really hard. We did predict it would hit 870. Technically, it went a little bit below that, but then we filled this gap. And typically, when you hit these like gap fills and you hit a big level, you do see some buyers trying to defend it. So I think that it might try to get back up to 900. We'll have to see if we hold above that. If we reject off 900, we're looking for a move back down towards the lows. If we could hold above 900, if we get a dip like this and hit 900, if we could hold above it, there's going to be a good chance it tries to get back up to about 930 for a temporary move up. I'm hoping we hold above 900 to bounce, so watch for that just to be safe. For others out there, we have MSTR or MicroStrategy. It's looking a little bit weak right now. The 4 hour is still not really showing much of a bounce. So I could be looking for an attempt to get back up towards these lows over here for a temporary move down. Could you argue we have an inverse head and shoulders trying to form? It's possible, but I don't think we're done quite yet. We might dip a little bit more close to 270 before some buyers try to defend. For other tickers, we also happen to have Celsius looking bullish. It's about time this tries to bounce, especially after we had some decent buy orders. We're looking for an attempt for 28 very soon. I think we're going to be testing that, so keep that in mind. For others out there, we have Supermicro. I want to see this get back above 39.6. If that breaks, we're looking for an attempt for 40 plus. If we end up losing 36, it's going to be a bad sign, but I think there's a good chance it rebounds. Palantir is trying to rebound. We're forming a nice base right over here. As you guys can see, it's basing at this 80 area. If 80 fails, it's going to be a bad sign. But as long as we're above 80, we're going to be looking for an attempt to get back up towards 87.18 tomorrow. So there could be a small bounce coming. Rivian is looking like it has a bullish divergence. I want to see it break 11.29. If that breaks, we could push slowly towards that 11.58 area. For SoFi, we're trying to form a bullish divergence. We want to see this try to push for 13.04. So watch and see what happens there. For AMD, we have a nice double bottom like structure, so it looks pretty good. I want to see this hold above 100. As long as that holds, we're looking for an attempt to get back up towards 102.75. For ARM, we also have a bullish divergence here. As long as we don't lose 124, we're looking for an attempt to slowly push for 128 and eventually 132. For Coin has a nice double bottom. It's decent, but not that great. I think it might dip a little bit because of Bitcoin. So there might be a dip coming right over here back down to about 207 or below, and we'll see if it bounces. As long as it can make a higher low compared to this low, it could still dip and bounce, but look for a little bit more downside all the way back down to 207. Amazon is not looking that great. What I don't like is the fact that it's continuing to dump. We have a lot of gaps to fill on it technically, but we'll see if we get a temporary bounce or not. The reason I say that is because we also have a triple bullish divergence trying to develop. We need to see it get back above at least 203. If we get back above 203, I'm looking for 210 as a potential target. We have our 20 EMA's resistance. So I presume we're going to make a higher low here and start pushing for our resistance up here around this 20 EMA at 203.6. I do expect that, and then we'll see if we reject off that or not. If we reject off 203, we come back down. If we break it, we could continue to go higher for 210. So look for a move like that on Amazon. For Meta, we have a nice looking candlestick, potential reversal signal maybe. We also, have this bullish divergence here, but I want to see this get back above 630. If that breaks, we're looking for 639. And then if we get above that, we're going to be looking for a push, but I do see some potential for 630 to 639. Microsoft, we need to get back above 394. If that breaks, I'm looking for 400 plus. If not, we could be looking for a bigger move down. There's a possible inverse head and shoulders setup, but you want to see this essentially, we might get a little pullback move like this back down to our key fib level. Now I'm going to be looking for an attempt to get back above 394. If 394 breaks, 400 is easily coming like this. I'll watch to see if that ends up being the case. Google has a nice accumulation here. We're looking for an attempt for essentially 176. If that breaks, I'm looking for 180 as our potential target. I do see potential in this. So watch and see if that ends up being the case or not. For GameStop, we're kind of flat here. I'm going to be looking for an attempt for 24.39. AMC could be testing 3.09. If that breaks, I'm looking for 3.2 for a small move up. DJT is looking for 22.7. If that breaks, we're going to be pushing up higher for 23. The VIX, it's barely at support right now, just like how the market's at support as well. If the market bounces off its supports, the VIX could start to come down to fill this gap. That could be a good sign. We have a gap down here, so we'll see if the market gets a temporary bounce or not. There is some potential in that. The 10-year looks bullish for now. Same thing with the dollar. We'll see if the dollar pushes towards this resistance, towards 104.47. It's not really affecting the market like it normally does. The tariffs are affecting this more, so just keep that in mind. So what's my view of the markets? My view is I'm going to be unbiased with my analysis and how I kind of go about this, depending on what we do tomorrow. So if we lose our key EMAs, we will remain bearish, right? That's what the trend is doing so far. If we hold it just like how we did on Friday, there's a good chance we can form a base and try to bounce. I'm hoping, and I lean a little bit more in favor of us trying to hold the support and get a temporary rebound, especially after we got 3 straight red weeks without any sort of bounce. So I do think we're due for a temporary bounce. Just for like a week or so, temporary moves up, but then that could be setting us up for further downside later on. That's what my view is for now, so please keep that in mind, guys. I want to thank you all so much for listening, so please have a great rest of your day. I'll be back with another upload very, very soon. Have a good weekend, guys. Enjoy what life has to offer, and don't forget about daylight savings. You have to, it's starting, and you have to put your clocks forward. But anyways, I'll be back tomorrow before market open. Until then, have a good weekend, and peace out.